Hello and welcome, Forex trader. Steve here with tradingforexforprofit.com, and today we are looking at the pound Swiss on the daily time frame. Okay, I entered to the long side this trade last week, and I'm just now getting around to recording it. Actually, I thought I did the recording, and apparently I didn't, as I was going through looking at my trades. Okay, so let me walk you through this step by step. I entered, it looks like today is August 28th, 2014. Did I already say that? Okay, anyway, I entered last week, like the 20th or the 21st. One of these candles here. So let me explain to you what I see by zooming out. All right, here is a bounce establishing this level right here. We test it, we break through, okay, with this large candle. Once again, as you're going to always see, to verify that a level is what it is, it strengthens a level when you see a large bodied candle break through it where a bounce has been in the past. Okay, so here's your bounce, here's another bounce, a test, this is testing, and there's the break. Okay, shows that everybody sees this as a breakout opportunity. All right, the market returns back to this level, we bounce off of it because as the break becomes former resistance becomes support. That's the theory that is taking place here. So what happens is as the market moves away, comes back, traders are looking at this level to go long again, the ones that missed the entry here, okay, for a break retest. That's what our pattern is. Okay, so that we watch for. What happens here is all of this noise, we move back to this level, and now it's not just this level here, it's this level. Let's make this a zone. Okay, so what happens is the market pushes down as if it's going to break through, and then it's quickly and swiftly an engulfing candle takes over. Let me zoom back in, and we engulf this candle, which was a fake out, as well as this candle, which was a fake out. All right, so what happens at this level that makes it so significant, other than the bullish engulfing and the stop hit pattern completing itself? This is in fact a stop hit. Here's why. This level that we drew here, that we said is so strong, traders are looking at this point to still go long. All right, when it returns, the traders that missed this entry, let me zoom back out so you can see. Okay, they missed the long here. They perhaps missed this. Now they're looking at this level to go long again. All right, they see this wick, this what appears to be some kind of a signal to the untrained eye, and they take a long entry. They then place their stop losses right here in this area. All right, usually probably below this signal. And what happens next is the market pushes down, takes all the stops, okay, which are, they were originally buy orders. So to buy back, they sell. Okay, so they're selling at this point to the market who is buying. Okay, so which is going to cause, it's going to strengthen the market in a upward fashion here. We're going to move to the upside when that happens. Okay, so once again, the stop loss, let me say this again slowly. The stop losses that are in place here by the traders that went long are in fact they had buy orders. They entered with a buy order. Their stop loss is an order to sell it back. So as the market pushes down here and takes those, they're actually buying back the orders. Okay, the sell orders. Okay, by hitting the stops, they're buying back the sell orders, and as they buy in great numbers, we cause this big spike or this big engulfing signal. And what happens next is, as the market opens on Sunday, we gap up, okay, and kind of go sideways, I think, before another big push to the upside. So following this engulfing signal, I entered on a pullback. You could have entered on this candle, could have entered here, here, here. You had 1, 2, 3, 4 days of opportunity, and that is what is fantastic about trading the daily charts, is that there is a much larger window of opportunity to take your entries or set up a pending order or whatever you want to do. Okay, so this is in fact a stop hit pattern with a bullish engulfing signal signaling our entry to enter based on a pullback. So what I did is I looked for the strongest level. Here's the most recent high. I looked for at this level right here as a bounce. We break through with the candle, we move, we break through it again. So you see this big candle here breaking through this level. You see this large candle breaking through this level. What happens when we get to this level again? Another large candle. Okay, looking at this black candle, and then we move back with another large candle, and we break down with another large candle. So a lot of action at this area. So what I did is I drew this level, and I chose to keep my 2 times profit target below that level, and that's where I chose to enter with a pullback enough so that my 2 times profit target would remain below this level. All right. All right. It is now Tuesday, September 2nd, and our 2 times profit target was reached yesterday. So we were in this trade approximately 4, 5, 6, 7 days, okay, before we hit the 2 times profit. Now, take note what's happening right here at this level. All right, we drew this this area of resistance, and let me call it an area because if you consider it a zone, we did in fact breach this zone, okay, and that's where everybody was watching to perhaps go short. That's why I want to keep my 2 times profit at that zone. Now, who's to say that we're not going to pull back down into this range before springing back to the upside? Probably going to happen, but right now the market's fallen off sharply because the traders were watching this zone for an opportunity to go short. Okay, so that is exactly why we go for 2 times profit targets, because with the stop loss that we like to use and the pullbacks that are feasible, the 2 times profit target seems to be what the market hinges off of. If you watch the zones, okay, if you place your stop 5 pips below the signal with our patterns, and you place your entry with a slight pullback, you're going to see that the 2 times profit target tends to land at a nice zone, okay, a nice level. And if it doesn't, you shift it to your entry for more of a pullback so that you can get that 2 times profit target to that level or zone, okay. And 2 times profit seems to be the sweet spot. If you go for 3, you're going to find that although you have 3 times the reward, or 1 more times profit reward, it's not going to work out to your best interest because you're going to lose more than you win, and it's not going to offset enough to be successful. Okay, so this was a perfect example of the stop hit. I did state earlier, I was looking through my video, and I stated that we have a break retest. This is a break. This is that level being retested right here with this engulfing signal right here, with a pullback entry for a target right here. That was a very nice trade right here. This has pulled back and retested again. However, just the first retest is what we're looking for on a break retest. This zone now is there's a stop hit here, okay, and I did already explain that it was in fact because of traders that went long on this wick. It's also traders that went long at this level right here. Let me zoom out one more time. Okay, they took a buy entry right here when the market bounced up, and instead of taking a 2 times profit and trading the way we teach you, they place their stop loss below this level right here, below this red line, okay, which was what they consider support, because prior resistance, once broken, acts as new support. So traders tend to put their stop loss orders below this level, and the market knows that, and they swiftly move down, take the stops, and then drive the market in the direction that they intend for it to go. And then the general public traders tend to jump on when they start seeing the market go up, and they get in, and as soon as they do, the market falls off and takes their stop loss, or their stop loss orders. Yes. Okay, so there you have it. Another example of the stop hit pattern.